Tuesday again, that means it's Trading Tip Tuesday. Let's give away some free alpha this Christmas. Last week I talked about my favorite trend following indicator, Ichimoku Cloud. This week I want to talk about Williams Fractal and Williams Alligator. Both are free to access on most charting platforms, including TradingView. You can search the word alligator, search the word fractal. Both should pop up on the first try. So in essence, the alligator fractal system is much like any other moving average trend following system. These are quick moving averages. So with any trend following system, it's best to use it when things are trending. We'll talk about how to determine that. And the fractals, which I'll explain, are used for both entries and stop losses, which is great because it solves 2/3 of the trading conundrum, entry, exit, stop loss. So the alligator is the lines here, the MAs, and if you read up on the Williams alligator literature, you'll see it discussed as like teeth, lips, something, I don't know. I don't pay attention to any of that stuff. I just think of it as the 5, 8, and 13 moving average, and these aren't EMAs. I'm pretty sure they're just MAs or SMAs, simple moving averages. They're not anything out of the ordinary, anything fancy. So you want a bullish bias when the MAs flip bullish. So when the green is above the red and the blue, as soon as that happens, that is your look for long signal. As soon as it flips in the other direction, that is your look for shorts signal. I'll show that. Now you can also use the 8, the middle, as a stop loss as well. So that's your first stop loss in the system. If we're bullish and price closes below the median line, the median MA, the 8 MA, then you're out of your long, just as it did here. You know, this is a great example because it kind of shows the entire gamut of possibilities here. It shows how messy these look when we're not trending. It shows how it looks when we're trending. It shows how it looks when we get close to that stop loss level in the median line, but don't actually close the day, in this case the daily. We don't close the period below that line. And that's a critical part of this system as well. You're not looking for wicks here as far as entries and exits. You're looking for period closes above or below the entry and exit stop loss signals. So if you're treating this as a stop loss, you're waiting for a candle close below that level. So we're long here, almost stopped out here, and definitely stopped out as soon as these cross, the MAs cross. Once they recross, then your bias shifts again. And the reason this looks so messy on this time frame is because it's almost too slow. Oddly enough, these quick MAs are too slow to sort of catch up. If you're thinking this purely as, I can't be stopped out, I can't re-long right after I get stopped out. If you just do what the system tells you to do, assuming there's an active trend, in general, you're going to be okay. So here there was a bit of a fake out. First, there was a definite stop out here, and then a fake out here as far as the MAs are concerned. And then it goes higher, and I'll explain the entries in a second and the other stop losses. But just mastering this part of it, which isn't too difficult, is the first step. And I encourage everybody who's trading anything, any alt, flip through, just turn this on. It's easy to see and look at. Flip through all the charts that you look at, you're scanning. Add this to your tool belt of scanning because it's very simple and easy to master. And similar to the 50-200 cross, on the daily, the 50 and the 200 cross is sort of the gold standard for trend. If we're above the 200, it's bullish. If we're crossed on the 15 to 200 bullish, it's bullish. So it's a similar concept. Any MA trend following strategy, it's all the same stuff. But the faster MAs, using faster MAs like this helps you fine tune, entries and exits for something like this that is mega bullish, right? And also mega bearish. If we look at EOS BTC on the daily, the exact opposite of BTC USD, we have this pretty clearly defined range. The MAs crisscross over and over again. So there's no trade here. There's no trade setup. What you do is you box off this range and you say, okay, if we go above, I pay attention to the MAs. If we go below, I pay attention to the MAs and then use that signal accordingly. So as soon as we broke below this very clear horizontal, I mean, if you can draw a horizontal line on the chart, you know what I'm talking about here. As soon as that happens, then you're saying, okay, my bias is now bearish. the MAs are confirmed bearish, I should be looking for shorts. So how do you do that? How do you look for shorts in that case? That's where the fractals come in. Now you can either start adding to a position as soon as the MAs cross, or you can add or open a position when price closes above or below the fractals. So I call the green ones bullish fractals, the red ones bearish fractals. Some people think of it the opposite, but a fractal will print if we get a low, high, low, or a high, low, high. And you can read up on why it prints like that. You can change the parameters for the fractals. I don't do any of that stuff. I just use the basic default as is, changing nothing fractals. So these are slightly delayed. I can't print this fractal until after this complete candle prints. So this will burn you a few times on higher time frames, which is why using this stuff on the 4-hour or the 12-hour is certainly reasonable if price is moving quickly. So together you can use the fractals with the MAs as an entry exit stop loss system. So here's ETHUSD on the daily just over the past few months since October. It's clearly a messy range. Leading into October, price was all over the place. Tons of wicks, tons of volatility, just overall did a bunch of nothing. So you have to have some instinct there that, okay, there's clearly, it's a mess. I can't follow this cross immediately until we're out of this range. So again, if we box off this range, draw a triangle, draw a rectangle, whatever you want to do, draw some horizontals. The other thing you can look at is, are we breaking successive bullish or bearish fractals? Here we broke 2 bearish fractals to the downside. This was a risk of falling lower. It ended up continue to range. It didn't actually break down. So now we have 3 bullish fractals, and now we're breaking above those fractals, and then all of a sudden we pop bullish to the upside. And it sounds like hindsight trading, but it's actually easier to see this, as it's happening. Again, I'll show this on Tezos in a second, but you just box off an area, say, okay, that's the range. I'm going to wait for these fractals to break. So we get 3 bullish fractals, we get 2 bearish fractals, we get a bullish cross here. So it says, all right, we're bullish now. We're looking for longs. We can either enter a position on sort of this candlestick here, or we can wait until what we're looking for is a candle close above a bullish fractal print. So immediately when we see this cross, we look to the last bullish fractal print, and we again draw horizontal and say, okay, that's our entry. We need a candle close above that price for a long entry. And each time this happens, you can see where the entries will lead. At the same time, we're also watching for the stop losses, these fractals here. This is what essentially acts as a trailing stop loss. So this will continue to move up the entire time. And again, you can see, similar to that BTC example I mentioned earlier with the crosses here, if you ignore the rest of this and you're just watching the MA crosses, this does briefly try to cross on itself in a bearish direction. We do cross below that median line on that red 8 MA. So this isn't always pretty. You're going to get sort of messy signals here. It's important to know what those look like and act accordingly. But when this flips bullish decidedly and breaks a bullish fractal, then that's telling you to stay long. So then you go long here, and you're just holding this whole time, right? Until again we're at this median line, as well as breaking down below a bearish fractal. And you can see again the entire time your stop loss is moving up, stop loss is moving up. Then you're out here. You can re-enter here. You can re-enter here on this horizontal break. And currently the next level would be 680 for an add. Now, a lot of people aren't going to like this because it's breakout trading, essentially. It's breakout trend following trading. Some people might rather buy the median line than buying higher highs, which is essentially what you're doing here. And this is definitely one of the messier past couple months. I wanted to show ETH specifically because of that. It doesn't always look pretty. It doesn't always look perfect. Here's YFI on the 12-hour. And again, you've got this defined range, very clear horizontal here. If you can draw a horizontal line going into October, you know what to do here. The other thing, if you know chart patterns, you're like, okay, here's the head and shoulders. That's a bearish reversal pattern. I'm setting myself up for that bearish bias. Then we get the MA confirmations in late September. They cross bearish, right? And now fractal prints. Perfect. 2 days later, this fractal prints. So now we have an entry for a short here. We have a stop loss for the short here. And that's all she wrote. not only that, but it was the horizontal break of the Head and Shoulders. So all this stuff kind of plays on other things if you know a little bit about candlesticks, chart patterns, horizontal lines. So entry, 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 and as these fractals move up, your entries also move up. So it's sort of like a trailing entry system as well. So even though we don't get a candle print until several days after this fractal print, there's a few more fractal prints before that. I hope this makes sense, but anytime price breaks below a bearish fractal in a bear market, you're adding to your position, or you're just confirming that, yeah, this is the right trade, this is the right trade. And the opposite of that, the trailing stop, would be on this bullish fractal. So your stop gets moved down, move down, move down, move down, move down, and eventually you're definitely out sometime between the 6th and the 7th of November. So overall, it's a pretty good hold and very clear signal. You know, a lot of times when people are bullish or bearish, they're not sure how bullish or bearish they should be. They're not sure if they should continue to add to a position if it's already heavily in profit. This is sort of an objective way to do all those things. Here's ETH BTC, and again, it doesn't always look pretty. This is the daily. If it doesn't look pretty and you're sure it should be bearish, just move down on the time frames. Just go to the 12-hour, go to the 4-hour. But again, even so, this flips bullish, right? This flips bullish late November. The MAs are all crossed in a bullish manner. Here's your fractal print. Here's your fractal print. Here's your fractal print. Here's your fractal print. You can see this entire time we're bullish on the MAs, we never get an entry confirmation because the candle never closed above those levels. Another way you can think about this is if this is a massive equilateral triangle, descending triangle, whatever, some sort of triangle, right? You're waiting for a higher high on the entry and you never get that in this case. Then MAs flip bearish and all of a sudden you're breaking below fractals and there's your bearish entry. So on the daily, we haven't printed another entry yet, but I'd be watching this on lower time frames at this point. If something's super volatile, spiky, just hard to get signals a read off of, I usually go to the 12-hour or the 4-hour like I did for Wi-Fi here. You know, you can move up and down. I wouldn't think of it as curve fitting, just as trying to get a better read on what's going on. Here's Link. Here's a great example of, you know, this looks like a first grader just drew some crayons on the chart, right? It's an absolute mess. Candles are all over the place. You're getting crisscross, crisscross, crisscross over and over again. If this looks super messy, you can also move up. You know, just go to the weekly. Start with the weekly and move down, if anything. But see how it looks on the weekly. And you're like, oh, okay. Whew. That's I can breathe a sigh of relief. It's a lot more obvious. There's very obviously a bullish trend here, right, on the weekly. And this entire time, since April 2020, printing these trailing stops, and we never actually crossed below any of them. We did close a week below the median line, so maybe you're, depending how you trade that. I don't always trade that as a stop loss, but that's one thing you can do, like I mentioned earlier. But if you're bullish, you're adding here, you're adding on this horizontal, and you're just holding this whole time. And you're basically waiting for higher highs again on the weekly. And you're not really panicking, although this looks terrible on the BTC side, BTC pair. The USD pair is still holding above the trailing stops. It's holding above the median line. It's telling you don't go long until we're above 17 and get ready to jump out below 1050. So another thing you can do when you're just completely perplexed as to what to do is just go to the weekly in that case. Here's Tezos BTC. Again, you can sort of find your bias on the weekly and then fine tune the entries and exits and stop losses on the daily. But once again, we have this very defined horizontal range, right? Box it off, rectangle, whatever you want to do. And on the weekly, we get the MA crosses rather late as far as the entries are concerned. We do get a fractal breakdown here fairly early in July. But if we flip to the daily, and again, we box off this area, add 50 horizontal lines, whatever you want to do, right? Just a high, a low, boom, you're done. And in late August, after 55 recrosses, crisscrosses, this is finally bearish on the MAs for a little bit. And we're finally breaking down on some of these fractals slowly but surely. And then by mid-September, very clearly we are breaking several fractals. So at that point, it's game on. We're breaking fractals that were bearish, we're below everything. Stop losses are very clear this entire time. We don't really close above one of the stop losses other than maybe mid-October. You can see we're above that red line, that 8 MA. and we try to reverse here. But once again, just draw your horizontal line. If you're confused, draw a horizontal line, right? And you get an entry here, entry here, entry here, entry here. You get a stop out here, and then you get more entry, entry, entry just over and over again. And you get another entry a few days ago. So this is another great example for, okay, I'm getting stopped out all the time. I'm getting entry signals all the time. This is just a way to clean it all up, clarify it, make it super objective. You could probably get a bot to do this as well. And then one last thing I use the fractals for, I use the fractals on cloud as a trailing stop loss system because they're a great trailing stop loss system. So let's say you're bullishly biased in early October from this bullish TK recross above the cloud, bullish Kumo breakout, whatever. And all the while we're printing these trailing stop loss levels, you actually stopped out at 17.5 and you're kind of just waiting at that point for the cloud. We get 4 fractal prints up here as we're ranging, and then we break all of them in a single day. So at that point you can incorporate the entries into this system as well as far as the cloud. You know, if I'm ever not sure or confused, I typically pop on fractals when I'm using the cloud. Here's ETH again, similar situation. Stopped you out around 560. Did get candle closes above fractal prints a few days ago, and then it just reversed. Right now your re-entry's at 680 based on your fractals. Stop losses at 530, something like that. So hopefully this is helpful. Play around with it. Add all this stuff to your chart, your favorite altcoin, your favorite time frame. Take a look at what it's trying to tell you, where your entries should be, where your stop losses should be. Sometimes they're obvious, sometimes they're not. Hope this helps, and happy trading.